I don't know what is going through your mind when you look at this chart, but in my opinion, hunting for undervalued stocks has become almost mission impossible in this crazy market. There are, however, some great picks with huge upside potential, and in this video I'm going to share with you my top 5 picks for this summer. Hi, I'm Mehmet Kara and my channel is all about investing. If you are new here, you definitely want to subscribe to see more videos like this. This video is part of a series dedicated to the hunt of undervalued stocks. I started in January with the Energy Transfer, back when its share price was about $6 per share. The first company in my list is Toyota Motors. I think the company doesn't need a presentation. It's undervalued based on its price to earnings ratio, which is 12.5, relatively low compared to its automotive counterparts. Investors are willing to pay for $1 of earnings for 76% of other automotive companies before Toyota. So it's clearly undervalued in this metric. But I think it's fair to argue that Toyota is undervalued as it relates to the EV sector. It announced 50 new battery EVs by 2025 back in April this year. The carmaker isn't known for being flashy and building vehicles which are anything other than reliable, smart and economical. I wouldn't have expected it to do an about face and market itself as a company that embraces the EV shift without the careful consideration. This is basically not what the company seems to do. So this is why I think Toyota is a bargain pick at prices around $178. It is and always will be a conservative pick, but don't forget that smart money often piles into conservative and undervalued stocks just like Toyota. The second company in my list has become synonymous for the Amazon of China. Of course, I'm talking about Alibaba. The giant e-commerce company is providing various e-commerce services, both mobile and online, domestic and international. Despite the wild year it's had, Alibaba is only down a modest 5.75% year to date. Yet there is plenty of room for growth for patient investors willing to get it now. According to the value screener on Guru Focus, the stock is fairly valued at $360, which makes it trading at a significant discount right now. The problem is that there are multiple strong headwinds which shoot its price lower than it should otherwise be. China set up Alibaba as its whipping boy and ultimately levied a $2.8 billion fine for it for anti-competitive behavior. This country is in a stage where it's checking what are the next fields to be regulated. As we know, cryptocurrency and fintech are in the focus of the authorities. But Alibaba is still growing and it faced a 35% revenue growth in 2020. Yes, there are emerging competitors from China as well, but none of them can replace Alibaba and most of the headwinds should disappear in the future. Additionally, Alibaba's biggest tailwind is still on the horizon. As a partial owner of Ant Group, Alibaba is looking to break into the fintech industry in a big way. Ant Group is the owner of Alipay, which is one of the largest mobile payment applications in China. The third pick might surprise you, is the Canadian fintech company MOGO, which provides mobile apps for its consumers with solutions to solving their own personal finance. It's very similar to the European Revolut, offering its consumers a mobile app where they control their spending, they can buy crypto for free and also offering them Visa and MasterCards. One of the reasons MOGO was getting so big attention of investors was due to the cryptocurrency. Yet the stock price was 1000% up since October 2020 and retreated back from the all-time high levels of $11.5 to about $6 levels right now. So the MOGO stock price is highly correlated to the crypto market, don't you think? Still, I believe the fintech company MOGO has a huge upside potential because of its very ambitious plans. According to its CEO, MOGO plans to be the most comprehensive digital wallet for Canadians. And the company is well on track of achieving this goal as it increased its share price in the acquisition of Square, which is a cryptocurrency platform. Also, it has a very stable revenue growth, 33% monthly from monthly subscriptions. So if there is an undervalued stock that could double this year, MOGO could be one of these. Of course, I'm not an investment advisor, and this is not an investment advice. Always do your own due diligence before deciding whether to invest somewhere or not. The fourth company in my list is also a dividend stock, just like Toyota. Snap-on S&A has a dividend yield of 2.2% compared to Toyota's 2.25%. The tools, equipment and diagnostics company comes with a PE ratio and forward PE ratio, which puts it in the top third of industrial manufacturers. Its operating margin, net margin, return on assets and return on equity are all solid and in the top 90% of industrial product peers. The company is financially strong and pretty much all around solid. But there is also one catalyst which could cause its share price to rise in the future. This is the huge used car sales in the USA in the recent months. As we know, used cars tend to break more oftenly, and we can see a huge or increased demand for tools in the future. The last company in the list is the riskiest one and perhaps the most controversial, the Boeing company. This is one of the largest defensive contractors and aerospace engineers in the world. And Boeing company is particularly famous for its 737 MAX model, the fourth generation of Boeing 737. This is a commercial jetliner which is used to transfer people worldwide. Chances are, if you have flown on a plane, it probably was the 737 MAX. However, as a primary contributor to the travel industry, Boeing took a huge hit due to the pandemics, where most of the flights were grounded thanks to COVID-19. In response to the pandemics, most of the airlines cut their orders for new planes. Also, less maintenance were required in these years. And the share price of Boeing represented this with around 50% drop in the first quarter of 2020. But it's worth noting that the share price of Boeing was already under pressure because of a lot of failures in 737 MAX model. With vaccines becoming more and more prominent and with progress being made on the 737 MAX every day, Boeing looks like one of the companies which will be great reopening play in the stock market. It will benefit most from the opening of the travel again, and as there is a light in the end of the pandemic tunnel, Boeing could be one of the biggest beneficiaries in the future. But now it's time for the you in YouTube. I want to hear your opinion. Let me know what are the undervalued stocks in your opinion for this summer, and what do you think about the 5 picks which I have presented here. If you liked the video, if you enjoyed it and find a value added here, press the like button as it means the world to me. Thank you very much and see you again with my next videos.